Alright, information requirements. The chapter discusses the combination for the impact principle of the three types of information required: the general purchasing cost system, regulatory reported information, special study information, productivity information, regulatory reported information. Railroad accounting principle believes the present reporting practices for the R1 are adequate at the time of the fulfilled requirements of the government purchasing general purchasing costing system. However, believes the refinements of reporting of the information would enhance the accuracy of the costing information. Particular principle indicates the present with the reporting shall be maintained because of the limited use of the general purchasing costing system because of the costs associated with the implementing and the reporting and the changes appears to be greater benefits would be derived from the improved accuracy of the application requirement. The greater accuracy the general purchasing cost system can provide with the special study that yield the most accurate rates costs should be used. No modification reporting requirements need to be made at this time. So should any modifications reporting requirements need to be made in the future, the casualty, homogeneity, practicality, and data integrity principles should be provided with the guidance for considering such changes. Making the modification in interstate commerce should be considered with relevance, research, and public comment. On certain circumstances, the R1 reporting is consistent with the practical principle, and even though the immaterial and little used information may be reported. Your current information requirement. The Interstate Commerce Commission requires a significant amount of the information from either the individual railroads of the AR, including the R1 reports, or other public available reports. Reporters with the restricted ability to elect the information comparable to base for the interstate commerce has prescribed the mandatory accounting system of the USOA. The railroad generally collect the data using the interpreted international marginal accounting system to fulfill regulatory requirements. The conversion maintenance assignment of the cost for the marginal test for the USOA conversion procedures based on studies that are generally performed at the time of the conversion with the current USOA 1978 with the typical railroads operating with the accounting department preparing the operating statistic operating department recorded the data of various field operations with the accounting department with the often deferred with the recorded revenue status for some of the railroad used to estimate reporting operating information when in the case of the individual railroad has developed a different definition of the particular statistic. Theoretically, such differences could be made statistically unusable in comparison with the railroad. However, the defects that have been demonstrated. The R1 reports. Railroads are required to submit the R1 report to the Interstate Commission. The R1 reports contain the information reported to the USOA information prepared in accordance with the Interstate Commerce Commission prescribed the procedure compromised with the 52 separate schedules summarized in Schedule 4. Schedule 200, the comprehensive state of the financial position and analysis of the railroad balance sheet. Schedule 210, the rules of operation historical based on the income statement. Schedule 410, the railroad operating expenses detailed report with the service the cost of the input with the Unified Railway Costing System. The A2 work table. Schedule 755, the railroad operating statistics summary with the basic source for the output measurement the regulatory cost system expense. This is in Schedule 410 with divided with the interfunctional and natural accounts of the group. The accounting reporting of the functional accounts related with the specified railroad functions generally conform with the organizational structure of the railroad. Each functional account with divided with the natural accounts of the salaries, wages, the materials, supplies, purchases, services in general, other public availability reports. In addition, for the R1 report, the Interstate Commerce Commission received the report. The CS for 51 reports produced the Association of American Railroad contains the revenue carload information by the car type. Freight commodity statistic contains annually car load to tonnage determined information for the car type, the traffic type, of the originator, the term of the receipt, the forward. Quarterly commodity statistic contains the same information for the freight commodity statistical report with the quarterly basis. Less damage report contains the loss of the damage caused of the commodity type, the railroad cost recovered compared with the Association of American Railroad information report of the member of the railroad. Forecast variation is usually sourced with the issue that the railroad cost adjustment factor is the national index for the railroad rates. Switching terminal company reports and contains the revenue and the cost information for each of the switching terminal company on the service to perform the Class 1 railroads. Our reports restricted availability in addition with the public available reports information collected with non-public availability. One example, the Interstate Commerce Commission Waybill sample. The waybill is routing of the billing document which includes the origin, destination, and landing of the carrier, the route, commodity with the published and tariff rate rate. The Interstate Commerce Commission Waybill sample to prepare with the contract of determining among other things the cost revenue percentage of the sample concerned with the confidential Interstate Commerce Commission approval required to access to data access is granted with a case-to-case basis but limited to public use. The file is available without restriction. Alternative reporting requirements. Consider the three alternatives considered with the projected requiring the geographical density of the cost of the report. The require more detailed cost in the center of the report, eliminating the reporting certain information. Alright, your geographical density cost center. The homogeneous cost information may be obtained with dividing the railroad into the smaller units. The most common operating features. One of the alternatives is subdividing the railroad into discrete geographical, while all their alternatives is to be subdivided with the railroad in several density categories to collect data. The two alternatives are presented jointly as they seek to capture the same causal relationship with one would be selected. Certain cost information must be more homogeneous, lever lower than the A. For example, the transportation waste structural intensity of the group that comprised 65% of the total U.S. railway operation expense in 1984, as considered by the effective density, the cost information collected by the basis of the line density operation statistics by use of the center based on the geographical area with the stipulate another operating characteristic of the density generate greater homogeneity of the cost of the pool data that may be established. Applying the cost of the center costing data with helping the identical line specifically opposed to the average movement of the cost of the railroad. However, the alternative may be difficult to implement the railroad with a less sophisticated management information system. Geographical cost center. The Scheer 1963 and studied with the French National Railway the differential line according with the operating with the financial data the fixed operation environmental geographical costs center produced the following conclusions. To use only the factors related with the tractor distinguish between long haul traffic and local traffic, including switching commute unit costs with varied lines, relating them to the gross total miles. To restrict competition with regulated movements with the represent 90% of the French National Railway railway's total traffic. Thus, Scheller found with the speed rate related information as well as the time geographical data were important. To establish a nonlinear of the cost, such cost and information can be derived with the geographical cost center. The flexible definition of the most cost center would be able to cost center with the concept of the same manner as the keeping the accounting system. Some of the railroads are presented with the organized geographical cost center, the capture of the information with internal costs and analysis. The Interstate Commerce Commission docket 37203 consider the requiring railroads to keep the cost center and at least at the same level of detail they're presently maintaining in their own internal accounting system. As a corollary, the geographical cost system accounting functional data requires the Canadian transportation consistent with the French National Railway sure the use of the geographical and arid data of the means of the established greater cost of the homogeneity to hope to establish the actual transit with the moving of the cost of the Canadian Transportation Commission through the general purpose of the cost system includes sufficient related detail with the permit estimation variable expense for the difference for the type of the equipment and operating condition of the geographical location. Density cost center of the other method to capture the mode the homogeneous data with the subdivided accounts identify the difference in costs attributed with the economy of the traffic efficiency. Certain maintenance of the way the transportation accounts may be disaggregated with the subcategories line density. Specifically, certain running transportation accounts may be disaggregated into the various densities to help develop more specific unit costs. Major constant training adapting density costs and center for the cost reporting homogeneity of the data collected with the circulatory definition for the costing center. The costing reporting would increase the density cost center information we're going to collected through, although not as much of the geographical cost center information were collected. The homogeneity of the data collected with respect to the weather topographical speed will also be reduced. Circumscriptly would exist in the definition for the cost center based on the year of the operating statistics including classifying operating statistics expense on a timely basis. Certain accordance with the information with the density with all the required disaggregation and operation sufficient details to generate the operation costs. Detailed equipment cost center. The equipment locomotive 3 cars expense for the group with the compromise for 25% total use for the railway operation expense in 1984 large compromise cost of the common to the insurance of the identity with the non-subject identification assignment with the geographical base for the most railway. Since the equipment is not dedicated but to assign the operation division, the equipment may be divided into the cost center with the capture differences related to the use of the difference in the types of equipment for specific commodities. Further refinement equipment that costs into the more specific categories is appropriate only if the equipment must be identified with the specific shipper for the equipment cannot be used and interchangeable with other equipment. Presently, the parties use specially study information specific equipment for the particular movement that require movement and the type of the cost that would provide the same level of the refinement obtaining the special studies and appear impractical. Alright, elimination reporting of the certain elimination. Elimination reporting certain information reduced reporting burden placed on the railroad and simplifies the cost processing. However, the elimination of the reporting requires elimination change of the cost may outweigh any of the costing savings associated with reducing the reporting. Whether the USO is modified later date with the provided less of accounting operating detail as part of regulatory importance and individual R1 schedule, many schedule with the limited use include the 220 rated earnings and 230 capital stock, 240 statement of the charges and financial position, 310 investment advance of the affiliated company, 399 accrued liability lease property, 340 depreciation base of the rate improvements to the road equipment, the lease of the others, 501 guaranteed and security chips, the 502 compensation balance, the short-term borrowing arrangement, the current USOA is compromised between the complete with the new version initially prepared with the Interstate Commerce Commission Bureau of the Accountants 1977. The AR Cost Analysis Organization, or CAOU, proposed to modify the use of the old USOA. USOA information requires established before the Unified Railway Costing System has been designed to do the time constraint associated with the implementation of the Unified Railway Cost System. The Interstate Commerce Commission relied on experience with the collective experience with the cost analysis organization, shippers and shipper groups, and consolation. Current USOA requires significantly more information than used the old USOA. Current USOA Schedule 410 requires 216 with the freight services expenses subdivided in four material categories, 758 accountants. The old USOA schedule required 154 line items. The service expense must subdivided in three categories and 409 accounting occurrences. Occurring elements. While the necessary account of elements were reported to increase significantly, all elements are not equally important. On account of the elements for the Class 1 railroad combined in 1983, analyzed the table below. In distribution in 1983, 410 account with the percent of the total freight dollar. A number of the account elements for the not costing requirement. A large number of the accounts fall in the 0 to 0.1 1/10 of 100% or 100 to 500% of the category, which is significant cost revenue because individual railroads present expense with some categories the higher compared with the industrial average. Many individual account may be a meaningful contribution uniform unless financial and other justifications exist. Group insignificant upon elements, many of the simplify the USOA without compromising the unified railway cost of the development of the unified railway cost system counts as elements associated with each of the independent output variables combined to analyze the variability. While the effects have not been measured with grouping the associated accounting elements of the current USOA would not appear to affect the result of the unified railway costing system analysis. Unified Railway Costing System and simplified reducing the account of the Unified Railway Costing must be either with and more efficient with appropriate working with the fewer elements of making the Unified Railway Costing System information easier to adjust specific movements and processing fewer account elements, making the Uniform Railway Costing System program easier to modify some of the other costing issues. The density information be addressed. Special study information. Current USOA requires the information to be estimated with the special studies accounting the allocation study for the allocated with the cost different out measurement the output estimation study for the estimated output measured not properly reported. If study information becomes dated necessary follow up the study that are not performed, the study information may be containing incorrect information. The remainder of this section defines the potential area of the Interstate Commerce Commission may need to address. Accounting allocation study of the railway generally collected data with using the integration manageable accounting system fully regulatory requirements using the conversion matrix assigning the cost of the manageable consent system of the USOA conversion procedure based on the study of the general performed at the time of the conversion of the USOA 1970 remain the valid railroads, but the Interstate Commerce Commission should periodically update these studies. Output estimation studies. Certain output measures that are not reported by the Interstate Commerce Commission result reasonable practicable that are not computed by the Interstate Commerce Commission either constant or the factor which are the result of the special study of the factors which are updated with the annual statistic follow the prescribed methodology. Significant operation statistic computed with the manner including the operating switch factors, station study factors, car date factors, circular factors, special studies with their foundation with the constellation and factors that undertaken with the present interstate commerce variable proceedings in the 1930s and 1960s. Similarly, most of the methodologies used to update the remaining parameters were developed during the same period. Many of the output measures were accepted in the interstate commerce from November 1963 statement 7 at 96.3 explanation for railway cost finding procedures and principles relating to the use of the cost. These parameters were incorporated with the rail form A at the time of the have been subsequently accepted the interstate commerce staff for the using the unified railway cost system. Finish of the studies caused the concern regarding the accuracy allocation cost of the interstate commerce to comply with the casualty data integrity principle that should be updated these information. productivity information. Productivity principle indicates when the practical appropriate product adjustment should be included with the cost. Indicates the measure cost of cost and change accurately measure the cost of change using the general purpose of the cost in two ways. Two ways to adjust the pool data the using the regression analysis of the common base year to adjust the output of the unit data of the more current period. Adjusting pool data. General purpose costing systems such as the unified railway costing multiple year expense for each of the railroad formulate the regression equation for the normalized multiple year maintenance expense for the establishment of the variabilities unit costs. Before the analysis is undertaken to produce the best fit equation in the unified railway cost system and adjust the time series that of the common base for the achieve the comparability, avoid the differentiation from the clue of the implementation due to the inflation. A cost relation simply defines the relation between the inputs resource required output to produce the product. Measure of the resource required for the product and the output may, over the time, affect the cost processing and the possible treatment of the change of the product, the degree of the product indexes, and other treatment is incorporated at the time or a series variable in the regression equation for the measure of the changes in productivity of the occur. Adjusting the unit cost index of the use of the government process general processing cost unit should account for the productive change over the period for the applied with, for example, the index is applied with the general processing cost unit based on the 1984 expense operational statistics and cost of the movement of the cost of the third quarter of the 1986 estimate movement of the cost properly with the index is applied in 1984 based on the units must be accounted for productive change of the addition with the average inflation experienced in 1984 with the third quarter in 1986. Magnitude of change within the unit was a result not clear of the information available to inclusive of the AR stated with the change of incorporating the productive adjustment of the government purchasing costs, general purchasing costs. Some would not be material. One shipper that be documented with the incorporated with productive adjustment made impracticable refinement in certain circumstances, include the low lab materiality, and however any of the shipper group that includes the result of such adjustment would be material and therefore worth doing. Alright, and the rest is a glossary, and then it goes into a reference sheet, and then you have an appendix, which is a chairman railroad account letter to the General Counsel Jeffrey Cavas, scope of the authority of the railroad accounting principle, and that's the book.